Hi, this is Michael, and now we're looking at the US dollar chart. So the Dixie chart indicates that the US dollar is heading lower. But what are the subdivisions for this particular wave? And that's what we're going to look at now. So at the highs, we can see a weak 5-wave move that formed. Okay, there's no mistaking that that's 5 waves, even if it's a weak one. Then we had an A wave, because that's the first wave we see in a correction. So A, B, C, D goes down here, and then E. Right, so then after that comes wave 1 of wave 3. Okay, so at this point in time, it's possible to perhaps think that it could be a zigzag, except if it was a zigzag, you'd have a zigzag bounce, B, and then you'd have a 5-wave move, which we try to here, except it's choppy at best, and then you don't have another zigzag bounce from there. So that can't be it. So coming down, we have an impulsive start to the third wave, wave 1, and then you get your A, B, C, D, E, the end of wave 2. So typically the end of wave 2 ends towards basically at the level, when it's expanded, that is, wave 2 can end near the end of the first wave. So as you can see there, it did that. So I'll just zoom in a bit. Right, so very close. And then, so we'll just get rid of that line now. So you can see A, B, C, D, E. After that, you get another wave 1. So that wave E becomes resistance. Okay. So then you get wave 1 in a third of a third move, the beginning of a third move. Right. At the lows, we're going to have to go to the 15-minute chart. So you can see the first move up after that move down was a zigzag pattern. Now, this particular move here is so sharp, but because it's followed by a 5-wave move, we're classifying that as a B wave. And then what you got after that is a D wave. Okay, it's a choppy D wave, but you can see here the 5-wave move, correction, 5-wave move. So the move that we saw up recently was a wave E. So this explains the wave E in the Aussie dollar, and also, it kind of paints the picture that yes, we are going to move lower from this level. Okay, just because we saw a move up in the US dollar doesn't mean that it's going to continue higher. So typically this would spell the end of wave 2 once confirmed by a break of the low, the start of wave E. Okay, the dashed line is the confirmation area if we break below it. So will this go any higher from here? I doubt it. And that's because it looks like a complete 5-wave move. If not now, very soon. So this kind of explains the small degree moves in the US dollar. So having this sort of view, a 1-2, 1-2 view, kind of adds credence to the Aussie dollar going higher, because we can't really form another correction out of this. Like, you can't form a correction to say that's going to go higher due to this not being a zigzag for starters, as we mentioned earlier. So it can only really be a 1, 2, and then another 1, 2 pattern with another 1, 2 there. So in other words, without going crazy with the subdivisions again, typically you'll get about 3 1, 2s. Okay. Any more than that, and I think probably barking up the wrong tree like earlier on the Aussie dollar. But this is where you start to get the move lower, right? So as I'm expecting a move to go down fairly low at a minimum towards this dashed line down here, you would need to get a wave 3 happen, a certain length, and then you start to get your 4, 5 subdivisions. So you get your first 4, 5, right, for the initial move here, and then for the larger, you'd get another pullback, and then for the first wave up the top, you get another pullback before you eventually hit the end of 5 waves. So that's how I see a 5-wave move unfolding here. Okay, if you go to the daily chart, it is a pretty drastic move. But as we know, as you've seen, E waves can do this. And wave 2s, as I mentioned earlier, can end towards the end of the first wave. Okay, so it might be ending a bit higher. Okay, because the wave 1 ends there at the magenta dashed line, or it may just dip beneath it. There's no hard and fast rule for that. It's just a guide. But that kind of illustrates roughly what I see happening in the US dollar. And for this view to be invalidated, we need to surpass that red line at 105.250. But as you can see, price has maintained within this range, and I believe this is the reason why. So thank you for watching, and I'll catch you in the next one.